Is Memecoin season finally back again? Pudgy Penguins is one of the top performers today. The question is, will this rally last longer? Is this just the beginning of something bigger? Let's have a look at the on-chain metrics. Let's have a look at the data most people are not considering. This is not the first video on Pudgy Penguins on this channel. I've published multiple videos, and in the past those videos tended to slightly outperform the average video. Now they tend to just get average performance. So the attention is not dying down completely, but it's also not that there's a ton of focus on the Pengu token. Now, the rally in Pengu today is nice, but when we zoom out a little bit, we did have quite a bit of a crash, more than 80%. We then bottomed out in the middle of April, and so in the last 2 months, we saw an outperformance of 110% versus Solana. So this is not a US dollar chart. This is a relative valuation chart to SOL. Now what's interesting is that Pudgy Penguins is the 5th largest meme coin on the Solana chain with 656 million of market cap. However, in terms of liquidity on chain, when we look at the trending liquidity pools, Pudgy Penguins is only at place 41. So despite there being more than 500,000 holders on chain, that doesn't mean that all the activity is happening directly on Solana. It seems like a lot of activity also happens on the derivatives, so on the perpetual futures, the levered bets on the price. But let's first look at the on-chain metrics. So this is the number of first-time traders versus recurring traders over the last month. We see how there's actually not that much activity recently, despite the price recovering today. We're also not seeing the number of token transactions going up in any way. And when we just look at raw trading volume, so in US dollars on the left and normalized to 100% on the right, so segmented by different wallet cohorts, we also don't see that much of a rise. Initially, directly after launch, everybody traded Pudgy Penguins on chain. But this has changed massively. Now we see less than 1 million worth of trading volume most of the time. The split across different wallet cohorts didn't change that much over time. So it's still the same fraction of small retail investors versus whale investors. The way we make this distinction is by looking at how many dollars does a particular wallet hold of the Pengu token. Small retail is up to $1,000, medium-sized retail up to $10,000, large up to $100,000, and whales is above $100,000. But really, the main price driver where currently the price discovery is happening is not on the spot market, especially not on-chain on Solana. The spot market is dominated by the centralized exchanges, so there's no Radium, there's no Jupiter over here. It's all just centralized exchanges, and that's led by Binance with 35 million worth of trading volume in the last 24 hours. But compare this to the perpetual futures market. There was 143 million worth of trading volume over here. So the bets on the price matter much more than the direct transactions on the spot market. Now, for most assets, most of the time, the longs have to pay the shorts in the perpetual futures market. So it costs money to get additional price exposure, to bet with leverage on the price. However, when the short-term traders think that an asset is particularly expensive and that it's likely going to go down, then there will be more shorts than longs, then the shorts have to pay the longs, then it costs money to bet on falling prices. Usually it costs money to bet on rising prices, but in particular instances, when the market is heated, it costs money to bet on falling prices. What we're seeing over here is the open interest weighted funding rate for Pudgy Penguins. So do people currently bet on rising prices or on falling prices? And it seems like in the past, the perpetual futures traders first got it entirely wrong, right? A lot of long exposure while the price crashed, but then things turned around. Many people bet on falling prices, and that was close to the price peak, where then subsequently Pengu went down. Yes, the majority of traders is betting on rising prices most of the time, yet it's the shorts that tend to get liquidated more than the longs during times of volatility. So that's a hint that sometimes the price might get manipulated, right? If enough people bet on falling prices, we might get a short squeeze when the price short-term rises. Now, why do I say that the price appreciation might be short-term? It's because of the tokenomics. Usually, meme coins do not have an inflating token supply. But that's different for the Pengu token. Pengu was launched directly with a lot of centralized exchanges. The market makers were in it from the very beginning, and they still get supply in the future. The nature of Pengu is very different to other meme coins. There's an allocation for the current and the future team. There's an allocation for the company as well. And while this unlocks in the future, it's very hard to say whether or not there are some over-the-counter deals made in the background, where maybe the team is already selling off to third parties in exchange for giving a discount. That's happening quite frequently in crypto. It happened, for example, with MantraDAO, right? The Ohm token that crashed by 90%. So if you remember that price collapse, that was all because of OTC deals. And most people thought that the tokens are yet to be unlocked, but it was simply future supply sold already to third parties via OTC. And so the tokenomics of MantraDAO, of course, look more aggressive than the tokenomics of Pudgy Penguins, but the mechanism is the same. Really, what seems to be driving the Pengu price is short-term leverage with the perpetual futures. If a lot of people bet on rising prices of Pengu, then the token is going up. When a lot of people bet on falling prices, or they simply don't have interest in Pengu, the price tends to go down. Have a look at this chart. This is the open interest on Pudgy Penguins, so that's in green, versus the Pengu price. There is a lot of correlation here, right? When there's less open interest, when less people bet on Pudgy Penguins, the price goes down and vice versa. The problem really is, while it might look enticing to buy into Pudgy Penguins on a day like this, the long-term development is usually not that rosy. Here are the same 100 cryptocurrencies in the last month. Pengu is over here at the bottom left. It lost 17%. And during the same time, Bitcoin barely moved. Yes, it lost 0.87%, but still does it justify that altcoins crash down that much? Out of the top 100 altcoins, there were only 10 altcoins or so that appreciated. The vast majority of altcoins went down. It simply continues to lose money for most people. Now, as a takeaway, most people simply stay away from the altcoins. They say, I only buy stocks and gold and maybe Bitcoin, and that's it. But I think that's a missed opportunity, because it's not just the majority of altcoins that are going down, it's also that some altcoins go down very consistently versus, say, Bitcoin or Ethereum. And it's all about mispricing. It's not about finding the right asset. It's just about figuring out in what direction does an asset go. This here is Balancer relative to Ethereum, a constant underperformance. But we can actually set ourselves up in a way using decentralized finance that we are flipping this chart, that we're getting this kind of return. So you're betting on falling prices, in this example of Balancer, and on rising prices of Ethereum, and we get this nice return. In the last year, that's an appreciation of 150%. In the last 2 years, it's an appreciation of more than 500%. And really, the most important thing here is that this is not just cherry picking. Because again, most altcoins go down most of the time, especially versus Ethereum and Bitcoin. And so have you seen other YouTubers sharing their own personal performance long term, not just short term? I'm okay to do this. And that's where I think this channel differentiates itself from the rest. What you see here at the bottom is monthly data points. So this is now almost 4 years of data. And had I just constantly dollar cost averaged into Bitcoin, I would have gotten this light gray return. But instead of dollar cost averaging into Bitcoin, I also used relative valuation trades like this. And because I added that to my portfolio, I got the performance in black. I've got now more than double, almost triple the return, mainly because of that strategy. And so really, instead of trying to find the needle in the haystack, the one altcoin that might do better than Bitcoin, why not just have the odds in our favor and bet on all of those trashy coins to continue to go down? This is very likely what they will continue to do in the future. I have made several tutorial videos on that topic, how to bet on relative valuations with perpetual futures, or how to do this with traditional decentralized finance, and how to also do proper risk management, because this is the main objection I get. If you're betting on falling prices, that can be risky. It's only risky if you don't know what you're doing, if you don't have proper risk management in place. So if you're watching this video and this video, you should be good to go. It's all part of the premium membership, so it's down below, thebitcoinstrategy.com. I moved from traditional borrowing and lending in DeFi 2 decentralized perpetual futures 2 months ago and turned 40k so far into a bit over 50k. This, by the way, was when I didn't hit close enough of a stop loss. So that was a learning for myself as well. I'm of course sharing my own trades as well. So this here is the recent trade that I opened. Again, we're betting on relative valuations, very similar to Balancer. And here's how our community shares their own trades recently. Of course, the individual trades are always very impressive, right? You can make a lot of money with a single bet. But really, it's not those individual bets that matter. It's always the long term. This is really what counts. So feel free to check it out. It's currently $125 per month. You're also locking in that rate. So when in the future I will increase the monthly rate, you will keep paying $125. Whoever is subscribed will never see a price increase. You should see the link to Premium directly popping up over here on the screen. Just click on that. It will lead you to the website to sign up. If it's your first time here, feel free to subscribe. I publish here regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.